Hello everyone, and you're watching Bitcoin Bubble news channel. A lot of people would say that it has problems like being more expensive than other options and taking longer to settle transactions. But those are things we like about it, not things that are wrong with it, because they help make it the safest environment for crypto assets. That's why we don't see those as problems. We see them as really being built into the environment to make sure it works as the safest place for crypto assets. Like regular financial markets, cryptocurrency markets have yearly patterns that are affected by changes in the economy, new regulations, and technological progress. Cryptocurrencies, on the other hand, are affected by things that don't happen in traditional markets. For example, mining rewards, halving events, and the fact that they are speculative make things more complicated for buyers. In this context, Cathie Wood, CEO of ARK Invest, has talked about Bitcoin and the way regulations work in the US. She has said bad things about how regulations slow down innovation and warned that strict rules push businesses away. She also talked about how she deals with market instability by focusing on educating clients and thinking about long-term investments, showing that she cares more about her clients' needs and the results of the fund than her own net worth. Cathie Wood said that Bitcoin's higher cost and longer transaction payment times are seen as problems by some, but she thinks these things make it safer. The head of the CC, Gary Gensler, was criticized by her for being bad for business and pushing new ideas out of the US. Wood said that because of this, some companies won't work with us clients because they are afraid of what the government will do. Watch clips from the interview to learn more about Cathie Wood's talk. If you want to see more videos like this one, please like it, subscribe to the channel, and turn on post alerts. Have fun with the movie. Do you see any other bad things about Bitcoin? Well, a lot of people would say that problems like being more expensive or taking longer or slower. Longer times for transactions to settle. But those are things we like about it, not things that are wrong with it, because they help make it the safest environment for crypto assets. That's why we don't see those as problems. We see them as really being built into the environment to make sure it works as the safest place for crypto assets. Also, how do you think the rules will change for Bitcoin and other cryptocurrencies? What's going on? The US has been the worst. As I've said many times, Gary Gensler is a threat to our environment and has brought a lot of new ideas about Bitcoin and other crypto assets to the rest of the world. So much so that many creators who have moved to other parts of the world, like Switzerland, Berlin, London, Hong Kong, Singapore, won't even do business with us investors. That was the worst of it. Because they think that being controlled by US regulators will make them dirty. Why are the rules in the US so strict, more than anywhere else? As a supervisor, you have to look for power all the time. We know that the CC and the CFTC have had disagreements in the past, right? This was clear when we looked at how derivatives changed over the course of the 1990s. Both are regulated, but in different ways. That's what I believe happened. There is a battle for power in the regulatory environment. This is my area of responsibility. This is my area of responsibility. So we could go back to the Supreme Court. I'm not sure. That seems to have been the main point. Regulatory arbitrage is a new term for this. That's what I mean when I say that other countries that want to bring in new ideas are ahead of us. I'll now give you our first answer. When we first started ARK in 2014, it was all about drones and the FAI. In 2014, Amazon had its ninth version of drones. Amazon flies its own drones outside on its own land. That has only changed in the last few months. But in the meantime, Zipline, one of the companies in our startup fund, seems to have made friends with the regulator. From what we've seen, it has taught them how to do what they were trying to do. There are no shocks at all. The FAA did start to let Zipline fly a couple of years ago. You can try Zipline's package delivery service with Walmart in the Dallas, Texas area. That's why Zipline beat Amazon at its own game, which is very interesting. Other countries, though, when it comes to this legal arbitrage, Amazon tested its drones in Hong Kong, the UK, Australia, and India. After that, the FAA became a little more in tune. They started giving Amazon the green light, but I don't know why they didn't do it sooner. Cathie Wood talked about how she deals with market instability. This means that she teaches her clients about the risks and possible big changes in the value of their investments. She talked about how important it is to spend for at least 5 years and told her clients to make changes to their portfolios to keep the same proportions. Cathie Wood also talked about how she manages her money and said that she has always been a big saver. She also said that Cathie would love spending, which let her take risks and start her own business. Without taking on debt, she said that her clients' needs and the success of her investments are more important to her than her own net worth. Cathie Wood said she is used to changes in the market, but she is still dedicated to her investment plan and teaching her clients. To learn more from Cathie Wood, let's watch more clips from the talk. What do you do when the market changes so quickly and in such big ways? I can think that you could be up or down in a single day, 100 million bucks. At some point, do you just stop being afraid of it? Anyway, now that I'm aware of it, I think about our clients, and I believe it's very important for us to teach our clients. We aren't going to be your whole portfolio. There were some people in 2020 whose whole portfolios we were there and we were trying to say, no, no, we're writing papers now that we have them. So we should only put a small amount of money into it and know that this part of your stock will be very volatile. In the public markets, we're the most like a venture capital fund. That's what we've always said. And some people got that while others didn't. It's the most like a venture capital fund. We have 5 years to make an investment. We hope you do too. So, yes, I do think about our clients. The people who help spread our word, like our partners, are very important, but we also need to be out there more. And it's very important that we say, look, if we've just doubled in a short time, you should cash out. You should get back on track. Yes? Because that will give you the confidence that when we drop 50%, you will add us back to your portfolio because we should do much better than the broad markets over time from this level. I try to see things from the client's point of view. No matter what part of the market we're in, are we preparing them well enough? The market has also been very tough. And just getting people to agree that, buying based on momentum is too common. It's really bad. If you're trying to teach people how to buy high and sell low, I think that's a very basic thing to do. Don't buy high and sell low. Think about how you could do this another way. That is a much better way to put your money to work. We have a 5-year investment time frame for the day-to-day professional side though. No matter what you think, we're putting out proof every day. Do these businesses use AI as quickly as we thought they would? Not at all. We made some big sales in the first half of the year, while these other companies didn't. Things are going quickly and they don't understand. It's not possible. Other people will do this if you don't. Because we are investing for 5 years, I think this time of cleaning up has been very important for us. In the short term, when the market treats all of our stocks the same, we sell one to get a tax loss that will help us in the long run and buy another stock that is also down and out. It's a way of being. I can take chances now that I have that base. That's why when you ask me about volatility, I think a lot more about our customers. It makes me think of our dealers. I know this is hard for them and that we need to be there for them. Still, I know that one reason I left the old part of the business is because no one else is doing what we are. Not at all then. Then they did it with ETFs, but now they're not actively controlled. They are just throwing money at the wall and seeing which ones stick. But we're very broad. This is all we do, come up with radical new ideas. This is what will make or break us. There's a lot going on, so I think you want us to pay attention.